Bitcoin could be making an explosive move today, so make sure to watch this. My fellas, today I'm watching the number one thing that CT is underestimating, and that is JOLTS. At 10 a.m. Eastern Time, we get the latest US job openings data. And this matters because the job openings can weaken before unemployment really starts moving. And the last JOLTS reading showed around 7.36 million jobs openings, down from roughly 7.54 million the month before. And why do I care, you might ask? Because companies usually don't go straight from hiring aggressively into mass layoffs. First, they stop opening positions, then hiring slows, then the quits fall, and only later does unemployment become the bigger problem. That gives us an early look at whether the labor market is simply cooling or actually starting to crack. And for Bitcoin, that difference is massive. CT sees weaker jobs data and immediately says, oh my gosh, the Fed needs to cut, money printer comes on, and BTC is going up. But I think that's way too simple. Bitcoin doesn't want the labor market collapsing. It wants it cooling just enough. And then if the jobs openings come down gradually, that could actually be bullish. Less labor demand can mean less wage pressure, and less wage pressure helps the inflation to cool down. And that gives the Fed more flexibility to eventually ease its policy. And that is actually the sweet spot that nobody gets. Slower jobs, lower inflation pressure, easier policy, and all of that without a recession panic. But if JOLTS comes in extremely strong, then higher for longer can come straight back into the conversation. A hot labor market can keep wage pressure sticky, which can keep the inflation sticky, which gives the Fed less reason to cut actually. And then there is the other extreme. If the job openings suddenly collapse, don't automatically celebrate. Because now the question becomes whether the economy is simply cooling or whether companies are getting scared. And that's why when JOLTS hits today, I'm not just asking high or low, I'm asking cooling or cracking. That's the entire trade. If labor demand softens without unemployment exploding, I think that's constructive for BTC. If the labor market suddenly deteriorates everywhere at once, I would get much more cautious. And there's one more thing to watch, the bond yields. If JOLTS comes in softer and yields fall, Bitcoin could like that very quickly. If it comes in too hot, yields could rise and pressure our precious risk assets. So my bias is I don't want terrible jobs data. I want controlled cooling, because that's a huge difference between the Fed can cut or the Fed has to cut. And Bitcoin wants the first one. And if you want to see the actual levels and trades I'm watching around the release, my private group is completely for free. It's actually set up with an AI that is roasting me in real time when I'm taking the trades and notifying you with the exact positions I'm taking. So make sure to join in through the link in the description for free completely. Come hang out, let's chat around, and let's make some money together. On that note, Kong, peace out.